So just discuss some of those global cues first. Peter McGuire on the phone line with us. Peter, it was a fairly volatile week for the global markets last week. Some stability returning in terms of positive talks once again as far as the US-China trade issue is concerned. We never know what's going on next. But more importantly, even if there are fears of disruption in oil supplies, that oil field attack in Saudi Arabia, the recession fears or the slowdown fears are still keeping a cap on oil prices. What's your sense on oil price movement going forward from here?
Well, good morning, Deepanshu. I think that we've seen so many different factors come into play over the last matter of weeks, taking on board, an unsolved or unresolved issue as far as Iran, the attacks over the weekend with the drone, the Yemeni drone into Saudi, and you're talking about global weakness. So I think the only thing we can't add to it at the moment is weather outages from a hurricane, so maybe they're going to come shortly and the season's only commencing. So as far as forecasting price, I think you're probably going to see a little bit of softness, continued softness to the downside unless you see something dramatic happen, which sees a turnaround. And there it's got to be something quite extraordinary, because I thought that we would have seen price a lot higher than where they were due to those geopolitical concerns over the last matter of 2 months.
Right. So, Peter, taking cues into consideration, even OPEC, if you go to see, has given out a pretty bearish view with regards to oil markets for the rest of 2019. With OPEC coming out and giving this kind of a bearish view, what's the kind of sense that you're picking up? What are the kind of levels we should be watching out for on the downside in terms of WTI as well as Brent?
Well, I think you've got to look, Hiral, it's probably around about that $52 for WTI as some form of, a reality check if we're going to see continued softness. And that's what OPEC's, forecasting as far as global economic growth. So that's 50 to 52. And if you're looking at Brent currently sitting at about 59, it's got to be a $54 handle. And then there's probably going to be further softness unless you see something dramatic take a turnaround. So they seem to be the sort of numbers that many traders are keeping a very close eye on. And it's just very much a week-to-week proposition, though, things can change very, very quickly. And as I mentioned earlier, that hurricane season is very much underway in the States. And if it's going to be a bad season, as many are forecasting, then I'm sure that those weather outages can greatly affect price quickly as well.
Point taken, Peter. What's happening as far as metals are concerned? Again, we've seen fairly stable cues on the base metal prices last week. In fact, we saw a bit of rally in select base metals as well. Is it just a technical adjustment because nothing has changed as far as demand dynamics or the trade war fears go?
Well, that's exactly right. I mean, you saw a nice move up for the likes of nickel and some of those other metals over the last matter of weeks. They had a very strong rally, or a very strong uptick. But then you take on board, really, I think a lot of the focus has been very much on the precious side, certainly on gold and what's going on as far as inverted yield curves and the political sensitivities as far as Brexit, what's going on with those continued issues as far as trade wars and so on. And that's pushed gold up, the 1520, sitting at about 1521 at the moment. But, only a couple of days ago you were looking at that 1535 sort of number. So probably more upside for silver. Keep an eye on that from a trading perspective. And I feel that you're going to see a continued push to the upside for some of those, precious metals. So it's probably a time to be long on those. And I don't necessarily think that we've seen the highs of gold yet. There's a long way to run till we resolve a lot of major global issues.
Right. So, Peter, taking equity markets on the global front into consideration, the key thing with the way bond yields have been moving, especially if you talk about US as well as Europe, there have been signals with regards to where there could be a recessionary phase that we could be entering. But the kind of bounce backs that we are seeing does not give you that clear indication. Now, taking this into consideration, gold, in fact, third consecutive week of gains that we've seen on that front. As gold has been taken as a safe haven, do you think bets are moving towards gold versus what's happening with regards to equities? And would that be the advice as well to the investors?
Well, I think it's got to be, Hiral, but there aren't many markets that have performed strongly this year, though the Australian market's performed very well, and certainly the US has, but many markets have been relatively flat year to date. And the uncertainty as far as, what's going on, those crushing bond yields, many traders, that's why they've looked so favourably at the likes of gold, which is up the best part of $200 in the last matter of, 4 to 5 months or 3 to 4 months. It's been a very strong move. So I think that that's the major reason, and a continuing uncertainty with the Trump-Twitter impacts as far as Z and trade wars. So until we get some form of resolve to those issues, that creates the uncertainty. I'm not even suggesting that the US equity markets have hit an all-time high yet. There might be even more room to the upside there. When you're looking at it, I mean, it's fairly, they've got a lot of right things going on. Cheap money, you've got full employment, you've got a strong consumer base. There's a lot of good things in the US economy, certainly, and you're now getting, a helping hand from Jerome Powell as far as a drop in rates. So all of those factors may see a further, uptick for the equity markets over this Northern Hemisphere summer. I think there's probably a little bit further upside, but overall, it's going to be 2020 is going to be a fascinating year, even and considering you've got an election year as well.